Hello and welcome. I'm Mark Thomas, Head of Financial Services at Equifax Australia. Joining me today is Alberto Fernandez, the Insights Principal at Latitude Financial Services. Alberto, welcome and thank you so much for your time today. Really looking forward to discussing the evolution and the future of buy now, pay later in Australia.
Thank you, Mark. Thank you for having me. It's a pleasure.
Excellent. Hey, why don't we get straight into it? Alberto, buy now, pay later has exploded in Australia and New Zealand. Based on your experience at Latitude, and particularly as Latitude being a long-standing point-of-sale finance provider in the Australian market, why do you think this is? Why the explosion?
Yeah, thank you, Mark. So, if anybody says that they're an expert on buy now, pay later, they're probably lying, because being such a new category and changing so much, it kind of creates a lot of new tensions and new learnings constantly. However, as you well said, Latitude has been operating the financial services and also on installments for a really long time. So we have that expertise with us. I will probably use or say that there is probably 4 reasons why buy now, pay later has done so well. One is a long-term trend, even before COVID, of mistrust on institutions. We saw it with the big review of banks and financial institutions that happened in Australia, but there was already a trend of people kind of moving away from being financial institutions, not just banks, but also government and so on. So that was a big issue. The second one that got accelerated through COVID is the impact of online, so online shopping. A lot more people, due to the circumstances, had to use online, and therefore having a ability to obtain the items they needed now was quite important. And we saw through COVID that while the trend had started before, through COVID it's just accelerated dramatically. Now, a couple more reasons that are perhaps a bit more relevant to the category. One is what buy now, pay later offers is an easy and quick access to money. Now, traditionally, that had been a bit more challenging, particularly for certain segments, that they had to go through big hoops to be able to get the money they needed. And buy now, pay later was able to fulfill that kind of a small credit quite quickly. Now, this is not necessarily a good thing for everyone, as we'll probably talk later on. It has created, or it creates, a lot of problems, as we have seen in some of the recent annual reports from some of the buy now, pay later providers, that the rise in debt has increased. So being able to do that responsibly is quite crucial. So the easy access to money obviously has worked really well. However, I'm sure we'll discuss later on, from our opinion, that has to come with a strong responsibility from the providers. And fourth, I'll probably say that beyond that, what no one anticipated is the experience buy now, pay later providers offer. So it's not just simple and easy to log in and sign up, but it's also, once that you are inside the platform business, you receive offers, you receive discounts, you kind of exposed to an experience that you didn't have when you were with the big 4 banks. So the combination of all those 4 trends has created this kind of boom of opportunities. And I say boom because it's, I think there were like 20 something registered buy now, pay later providers, and it feels that every other month there is a new one coming into the category. So you're very right to say that it has exploded. It's quite interesting how we have seen in the last 2 years this huge increase in growth on the category. But you also know that at the moment it only represents 2% of all payments. So in a small chunk of all payments, we have a very competitive set of providers.
Yeah, which is amazing, and I mean that boom has just been incredible for I think everyone to watch. So I mean, given that and given where it's come from, what do you see for the maybe the trends and the challenges are going to be moving forward as that market matures more? Have you put some thought into what we're looking at in the next, say, 2-5 years?
Yeah. A great question, Mark. So yes, as I was saying before, typically with any category, you see almost 5 stages of evolution. The first one is, you identify the need, and then everybody kind of addresses to the same need. And what happens after that is happening in the buy now, pay later category is a lot of providers offer exactly the same need to customers with little differentiation. What happens after that is a stage of consolidation. We had in the last few months, you probably know how a lot of the, medium-sized and smaller-sized providers are starting to join forces. So what comes with that is the question of longevity. Until now, because there was such a big growth, it was perceived that, you can come into the market and you could survive. Now, what we have observed is that as companies start to get more mature, the need to be profitable, the need to be there for the long run is starting to be questionable. So you can't expect that all 20 providers are going to be there in the next 2 or 3 years. It might be more merger acquisitions, or, unfortunately, they might not be able to manage or admin the finances the right way, and they might disappear. This creates a particular challenge for merchants because, in the whole relationship, it's not just customers who benefit from the relationship. Merchants on the other side obviously benefit from having access to more customers. So a right partnership with the right provider is quite crucial. So as the category evolves, what I'm expecting to see is less providers, more consolidation, and potentially an evolution of the offering. So we had buy now, pay later, and you will see that the pure buy now, pay later providers will start to move into offering other products. They have to, because buy now, pay later on its own is perhaps not a very profitable product. We've seen that, the annual reports from Afterpay or Zip, that they're still not producing profit. In our business model, that I think is perhaps due to that longevity in the market proved to be the right one, is that idea of graduating customers from buy now, pay later into other providers. Linking back to the point I was making earlier, that providing a best-in-class experience facilitates this longevity, because we're able to hold on to the customers for longer, providing more access to financial products, so keeping them for longer, fulfilling their needs, and that is ultimately a benefit for merchants, because it allows us to create more conversations with these customers that ultimately benefits all our partners.
It's an interesting point, Alberto, and I think we'll get to that loyalty piece, that customer loyalty piece a little bit later, but certainly in terms of opening the wallet up, so to speak, to use an old term, and getting that pathway to profitability through this channel is obviously the big challenge.
Oh, no doubt. I mean, ourselves, Ham, there are few buy now, pay later providers that at the moment are profitable. So we're one of the few, and we're very proud of that. But we also proved that a pure buy now, pay later model at this stage perhaps is not viable. So those pure buy now, pay later companies might struggle unless they're able to move into other categories. Otherwise, it just becomes get more customers. It's almost a fulfilling cycle in which you need more customers to feed the engine. And the moment you stop acquiring or growing, the whole thing stops.
Yeah, absolutely. So just maybe with a little bit of view on the merchant side, how do you see that playing out from a merchant perspective over the next few years?
Well, there's the ease of access to money, the hassle-free access is something that merchants have really welcomed. The ability to have an amazing experience when people join Latitude or other buy now pay later providers has been beneficial for merchants, because what that has created is an extra marketplace of customers that it would have been difficult for them for merchants to reach in any other way. So the benefit is not just on customers being able to access offers and discounts and small amounts of money or credit. It's also been on merchants being able to tap onto a bigger pool of people. Now, what this has also created is the perception that things can be really easy, and it can be really smooth and hassle-free. And this is an interesting point, particularly in our position, because there is an interesting tension between hassle-free and responsible lending. And you know, it's obviously very easy to just provide $200, $500 with very few credit checks. You know, at the moment in which you add a credit check step in the process, creates a bit of friction. Now, we think that it's crucial and fundamental to have a credit check, and we do it in all our products. So we're trying to solve the tension and the friction with technology. You know, we leverage your partnership to be able to kind of access as much information as possible to make a decision. But we feel that is an interesting tension in the category. And you know, interesting enough, those who are doing the credit checks are kind of starting to move more into the profitable side of business. And you know, our point of view in here is quite strong. We feel that credit checks aligns with responsible lending, and that we think is crucial for several reasons. One, for our customers, make sure that they don't get into any debt cycle. For our merchants, to make sure that we have quality customers, and also for ourselves, to make sure that we stay and provide the services we want to for years to come.
It's intriguing, isn't it, the whole that whole cycle, and I guess particularly given, you know, that there may be some activity on the regulation side down the track as well, which we'll all keep an eye on. But also, you know, I would imagine that there's a lot of, you know, you are seeing, you know, thin files come through. You know, like, you know, I guess the first foray into credit for many people that you're seeing in the market at the moment.
Yeah, absolutely. It's some of the information that we've been gathering tells us that, you know, buy now pay later is becoming almost like the training wheels for some people. It's almost like, you know, they don't want to get themselves into the seriousness of a credit card or a personal loan. For them, it feels that it's just, you know, too complicated, too difficult. So they're getting the training wheels on how to borrow money and pay back. So from that perspective, it's almost beneficial, because it's almost educating cohort of the population that wants to learn, but don't have the access to the financial literacy.
Yes.
So we observe, for example, in some of the research that we conducted, that there is groups, particularly the younger population, that might have not got the learning from the parents.
Yeah.
And this is quite important. We identify that, you know, learning from your parents, learning from even school, how to manage your finances is crucial. So if you haven't been exposed to that, there is a gap. And from there is two potential scenarios. One is you put the training wheels, or you start riding without training wheels. And this scenario is dangerous, because you quite quickly get yourself into debt. So being able to trial with buy now pay later, you know, how to borrow money I think is quite an interesting point of view, and we obviously try to support those that need it with, you know, additional support nets if something happens, you know, hardship, debt, you know, debt consolidation loans. So we try to obviously help and educate those that need it.
Excellent. Well, Equifax strongly commends credit checking as well. So we're pleased that you went down that pathway. Alberto, maybe just taking a little bit of another avenue there, just in terms of segments within the Australian market that you see may benefit from the expansion of buy now, pay later. Maybe it's having a bit of a lens into the future.
The buy now, pay later category started, as we know, with the slightly younger groups for the reasons I already mentioned, and mostly in fashion.
Yep.
Fashion, and then it expanded quickly. Now, what we are observing is that the model is expanding into a lot more categories, and some of those categories are perhaps creating a negative perception of buy now, pay later. So we observe how moving into groceries, for example, and other basic needs categories is damaging, in our opinion, the perception of the category, because it's perceived quite rightly as, providing money for a basic need that could increase the debt risk. And what we were mentioning earlier around people getting into more debt. Getting credit checks in those situations is crucial. Otherwise, we kind of exacerbating the problem. Now, over time, buy now, pay later has moved on into older segments of the population, and now almost up to 65-year-olds, we see them coming up quite strongly. It is true that on the younger groups, the utility of the product is much higher. So the older groups might try once and see how it goes, and then they try again. So they are using it to control their finances a little bit better. Now, what we notice when we break the category into different groups is that there are certain groups who are financially okay, as in they have a decent income, and they have tried credit cards in the past to fulfill some of the needs around acquiring what they need. They have stopped using their credit card and putting the credit into buy now, pay later, because it allows them to budget the finances in a better way. It allows them to manage the finances on the app and allowing them to have a better experience, not just of their financial product, but also the shopping experience combined.
Yeah.
Now, in terms of segments as in industries, if we talk about industries, we have noticed a lot of big increase on health. It's coming up. Solar has been for a while, but we also particularly interested on supporting people who want to get financial support on green loans. So we saw CBA launch it. We've been talking about it for a while, but this is an area that we really want to put a lot more effort. So helping people with electrical vehicles, solar, batteries, being able to provide access to those services in a way that is more accessible and allows people to pay all the time.
Yeah. It'll be absolutely intriguing, to see where that all goes. And I think a year ago we would not have been talking about health, green lines, that sort of thing. So it has moved so substantially over such a short period of time. And bring it back to that customer side again, and I guess understanding the customer base. And you mentioned before that loyalty piece. I mean, what's your thinking about establishing that customer loyalty through this channel? I think it's one of the great challenges that all providers are facing at the moment.
Great question, and I think that this particular point is a point of difference for us versus other buy now, pay later providers. We identify two kind of cycles: short-term and long-term. Short-term cycle is the cycle in which you want a new pair of shoes. you sign up with a buy now pay later provider, and you buy the shoes, and that's the end of the relationship. You then kind of might be prompted with new ideas around whether you buy some share or anything else. The relationship is quite short term and is very transactional. Now, we are in this business for the long term. We've been around for many years. Fun enough, the first one of the seed institutions of Latitude, we was almost over 100 years old. So we've been around for a long time. And what our model is based on is on keeping the customers for longer. So that is when somebody signs with us for a buy now pay later provider, the ability to collect information around how well they pay on time, allow us to fulfill bigger financial needs as they grow up. So what I mean by that is, if you are, say, a millennial and you buy your fashionable shoes today, at some point in the future, you might need a personal loan, a car loan. You might need to travel. Now, being able to offer all these products within the same umbrella and being able to have the information we have on how they have behaved with us on buy now, pay later, allowing us to provide better interest rates to our customers than it would have been otherwise. Now, the ultimate benefit for merchants is, as I was saying earlier, is that they are staying with us for longer. Some of our credit card customers have been with us for almost 10 years. So what that means is, from a merchant perspective, is we are able to fulfill financial needs as people evolve, mature, and therefore allowing us to contact them with discounts and offers that our merchants kind of collaborate and partner with us, therefore benefiting the customer, benefiting the merchants in the long run. So I think that the loyalty key is how you're able to move away from just a transactional relationship to create a sense of being here with the customer for the long term.
Yeah. Do you think ultimately, because you mentioned before it's so transactional, buy now, pay later, is in the future, and maybe it's happening now, that customers will look for Latitude branding, at the point of sale, and say, Latitude is here. I will, that will encourage me more strongly to maybe purchase this whatever it may be, a pair of shoes or this asset.
Look, we hope so.
Yeah.
we can only hope. We're doing all the very best to demonstrate to our customers that we have the best interests at heart, that we want to support them, and also to make sure our merchants understand that we are with them for the long run. To make sure they understand that we're not going to disappear tomorrow. To make sure they understand that this is not a 2, 3 year, 4 year gig, and then you kind of not going to be able to support them for what happens next. So this is really important, and we do know that there is very little loyalty on the category. Like a lot of the customers have 2, 3, even a small proportion of buy now pay later customers have even 5 or 6 providers, and they use them depending on where the offer comes from or what they get prompted at the exit. So being able to create a point of difference that says that we've been here for the long run and we're here to support our customers and give them the benefit of accessing products at a better rate, I think that's a strong point of difference for both customers and merchants.
Absolutely. And Alberto, just back to, that financial literacy point is just such an important one, I think, particularly in this segment. Buy now, pay later is still an unregulated offering in the market, but it behaves very much like credit. So how do you lend responsibly to this segment?
Yeah, we said it many times. We believe that while others might disagree, this is credit, and if this credit needs to be responsible, it needs to be some regulations and responsibilities from the provider that are followed. So we said a couple of times, for us it's super important that we do credit checks, and we leverage your expertise to help us with that. But at the same time, we want to be able to provide what our customers tell us they want, and that is fast access to cash. So avoiding or minimizing the friction to make the process easier is crucial. However, not to the extent of ever not being a responsible lender is paramount and crucial, and we believe is what it will keep this business running for the long run.
And do you believe Latitude has a very active part to play in financial literacy?
Very much so. So what we have identified within less on our customers and more in the market, I guess that because some of the products that we have, like our Go or Gem cards, have been quite relevant for those savvy customers. We have been lucky that we don't have a strong cohort of people who might be less confident on their finances. However, we do have some as any other provider. Now, in that case, for us, it's crucial that we design products that support their needs. So what I mean by that is, we're working on products that create red flags that allow them to understand what are the implications of certain things. And obviously, if something happens, and we know that sometimes something happens and you must miss a payment, how can we help them manage that situation? And make them understand that when you miss a payment, is a credit mark. Is an issue. It should be an issue, and it should be a problem, because you don't go to McDonald's and you leave without paying. You pay for you need to pay for what you acquire. So it needs to be an understanding that there are certain responsibilities on customers when they borrow the money, and lenders to support that process. And with literacy or confidence, because it's almost two sides of the same coin. There is a group of people who say or perceive themselves to be quite literate, but they still say they're not confident about their finances. And there is a group of people who, on the contrary, say they're very confident, but they're not very literate. And that is where the danger comes into place, because they believe that they are in control of the finances to find themselves in a really dear situation later on. So we try to identify them really early in the process. Obviously, the credit checks help us to do that. And then as financial circumstances change over time, we promptly contact them to offer assistance. As I said, debt consolidation is something that we offer, and it has been very important for us, but also try to constantly educate around the implications of using certain products and the risks behind them.
Yeah, it's a wonderful answer, Alberto, and
Thank you, Mark.
very well thought through. And unfortunately, we are at time, Alberto.
Oh.
So, look, thank you very much. So, Alberto Fernandez, thank you. Thanks for joining us. We look forward to seeing you soon. And thank you again.
Thank you. Thank you very much for the opportunity, and it's been a pleasure. Speak to you soon.
Thanks, Alberto.
Cheers.